Yes, so healthcare has been a very, very interesting area at the moment, and we've seen investors respond with some very high volumes coming into that area. I think there's a lot going on here. On the one hand, this is a defensive sector, so it's a natural place to run to. It's a place where you've got strong earnings growth and really where you've not seen any downgrades thus far. So there's that in the background, plus the fact that you'd have your political concerns in the US largely quashed. On the other hand, as you suggest, we've got a large number of manufacturers either involved in the testing, the ramping up of testing, looking for a vaccine or looking for a cure. And that news that we heard last night from Gilead is just one example of the excitement that's surrounding this sector.
Rebecca, can I ask you what to do in the fixed income space? It seems to me there's a very obvious trade here, which I see a lot of people have climbed aboard, and that is basically just buy what the Fed is buying at this stage. It's going to go up. Follow where BlackRock is putting the Fed's money. Do you see any reason not to follow that strategy?
One often says, don't fight the Fed. That is one of life's truisms. I mean, in terms of what we're seeing in the background, then we saw significant outflows from fixed income ETFs during February. We're seeing money returning to that area, and it's focusing straight away on the corporate bonds, on the investment grade market. People really don't want to push it too far out and go into anything high yield or high risk at the moment.
With the Gilead news, I can understand why people are focused on the healthcare sector, but it's a more mixed story, isn't it, as far as the broader technology space is concerned? And yet we see the Nasdaq holding on to gains. We see companies like Netflix and Amazon printing new highs. How do you negotiate tech at this point?
Interesting, because if we think about last year, this was the most popular sector ETF was technology, and that's continued this year, and it's not a surprise. And if you want to have access into AI, 5G, big data, I could go on, but there are many, many themes, and investors now have a way of buying it cheaper than they did last year. So that's not a surprise. What's very interesting for tech at the moment is it's outperforming on up days. It's outperforming more than 3 times than that it's losing on the down days. So it's really working in these markets. And the reason it's working is not just what's happening with the sales, and we can talk about software, semis, hardware sales, but if you think about the fact that these are quality companies, there's cash flow, there's strong balance sheets, people are so worried about where they're going to get the dividend, that where you find it, you buy it.
Rebecca, I want to ask you about what we learned from the plan set out by President Trump yesterday, a 3-stage opening of the economy. Phase 1, groups of more than 10 people should be avoided. By stage 2, you've got groups of more than 50 should be avoided, and then by stage 3 you start to get unrestricted staffing of workplaces. What does it tell us about the consumption habits we're likely to see in coming weeks and months, and also about this work from home category?
I think what we're going to see is a significant delay, not necessarily from people returning to some kind of normality in terms of shopping or working, but we've got to think about consumer sentiment. We've got to think about the fact that over 21 million people in the US have lost their jobs in the last 4 weeks. I mean, that's a significant toll to take on the household budget. And therefore, I think a lot of the stocks which have been moving in the last 2 weeks, and let's be honest, it's been quite a crazy rally given what's happening in the background. But what we're seeing is people get excited again about retailers, about leisure companies, luxury, autos, and that really does seem to be a bit of a trap at the moment.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.